Welcome to this week's BlockByte Weekly. Bitcoin is currently testing its upward trend support at $95,000. The next major level of support that we can see is around $74,500. And that's around a 25% drawdown from the all-time high we saw on October 6th of $126,000. Many altcoins are actually down 50% plus. And there is no doubt that we are in a corrective phase at the moment in markets. What we do like to do at BlockByte is look forward. Moving into now how liquidity will impact market performance in the months to come. There's two main things. So the first is that the Treasury General account is up to around $954 billion now. Typically, it's around $600 billion. And so it's flush with additional cash that's been pent up due to 1.5 million workers being furloughed due to the US government shutdown. As they come back to work, government spending programs are going to resume. Lending programs and payment for these employees that are now back to work are going to get back paid. And so by Wednesday this week, we're going to see billions of dollars injected back into the economy. The second major factor is on December 1st, the Federal Reserve is going to end its quantitative tightening cycle. So they're going to initiate buying treasuries again. They've not been buying treasuries for quite a while, and that's going to be pro-liquidity as well. We actually think the recent pullback has been due to a lack of liquidity, but we see that changing into year end and hopefully starting to see some positive effects in the market going into January, February of next year. The other major development over the last week was that Harvard University have an endowment fund, and they recently disclosed owning $443 million of IBIT, which is the largest Bitcoin ETF. That's their largest equity position across their entire portfolio. If Harvard are investing in Bitcoin, and in fact they tripled the number of shares that they own since reporting this last quarter, it shows that there's real institutional conviction here, despite the pullbacks in the market. Despite liquidity coming and institutions like Harvard buying on the dips, there are risks still. Some of those that we see are the labor market in the US is softening. 11,000 jobs per week got cut in October. There's fears around tech market valuations being quite high. For example, Palantir is trading at 400 times price to earnings ratio. That is a long time that you would have to wait to get paid back if the company didn't have incredible growth. So there's a few factors going on here. We see this as a corrective phase, and I do think that going into the new year and hopefully the end of this year, some of those liquidity impacts will start to drive through into upward momentum for prices.